Candlestick patterns every trader should know. The shooting star candlestick pattern happens when an upward trend is about to end. That's why it's called a bearish reversal pattern. Traders love the shooting star because it helps them get out of a bull market and keep their profits. Once they're sure that the pattern is legit, they close out some or all of their positions and might even start a short sell position. Now here's how you can identify the shooting star candlestick. The shooting star has a long wick on top and a small body below. And don't forget, the higher shadow's got to be at least twice as tall as the real body. That means a trap's been set and the market's gone down just as quickly as it went up in that time frame. So here's the deal. Traders usually chill and wait for the confirmation signals, like Genius Algo, which is basically the ultimate SMC algorithm, to show up before they hit the sell button after the shooting star candlestick. This way, they know which market structures are the strongest, and it can help them make better decisions. Alright, so when you see the shooting star, you want to draw a support trend line that's going up. After that, when the price goes below that line, it's your cue to enter a short position. You want to place your stop loss just above the shadow of the shooting star. And for your take profit, you got to use other types of candles or indicators because shooting stars don't provide you that.